If you've been following my channel for some time, you know how much I love engulfing candles. It's something that I trade myself every single day, and something that is really simple to look at in the market, but they're becoming very overrated. What's up, welcome back to Thailand once again. Hope you're doing fine, hope you're doing good, of course. Now today we've got to talk about engulfing candles. I was watching a few videos about trading recently on YouTube for fun, because I want to see what people are trading and doing, and they all, without exception, trade engulfing candles, which is insane. Like, why would anyone trade the same patterns all the time? For some reason, they do. So today I thought it would be a good idea to see how we can make these work, why they are overrated, and some tips to make engulfing candles work better. So I'll show you in details with some backtesting data, a lot of testing I've done to be able to share with you these things today. It took me many hours to plan this video, so looking forward to share with you how that works. Now let's begin by talking about what are engulfing candles. You probably know this already because you've seen 1,000 videos that share them, and it's able to tell you what they are, but let's just keep a basic definition of it first, and then we'll dive into how to make it work after. And by the way, my view of engulfing candles is quite strict. I look at a specific pattern. I look for a close beyond the high of the previous candlestick, and I'll show you how that looks out. But one thing you can do really quickly if you want to have a look at this faster is you go here. I have a script that shows engulfing candle. If you need access to this, let me know. I'll give you access to it after the video. Now, that is going to put in your chart, and you'll see all these engulfing candles here in the chart. Okay, I've modified this because the script by itself that I found before in TradingView has a very weak definition of engulfing candles. This one is a better definition. Okay, so what we'll look at is we look at a candlestick that closes beyond the high or the low of the previous candlestick. So here, for example, we have a bullish candlestick before. Okay, so this candlestick is going up, so the bars are in control. Then the next candlestick, we have the sellers. Now we don't look here at the high because that's a bearish candlestick. We want to look at whether price closes here below the low of the previous candlestick. And in that case, it does. It closes below the low of the previous candlestick. That's a good engulfing candle for me. You could have a wick here at the bottom that's more than that. That's okay. We just want to have the price closing below the low of the previous candlestick. And when we go the opposite, when you go for a bullish engulfing candle, we want to have price close beyond the high of the previous candlestick. A good example here is we have a bearish candlestick over here. Next candlestick is a bullish candlestick, an engulfing candle that closes beyond the high of the previous candlestick. So here we close here, we engulf the previous candlestick. Here, because it's a bullish candlestick, I don't look at the bottom, I don't look at the low. That doesn't matter to me, but that's how I look at it. So this is a lot more strict and precise and accurate than the definition you see on YouTube everywhere. People will say, oh, the candle has to close beyond the open of the previous one, but they don't take into account the wick. Now, that's okay, but the problem with not taking into account the wick is that, well, people were there, people were trading that price at the wick. So if you look at this example over here, some people will say this is an engulfing candle because they have the price closing to engulf this candlestick, but not closing beyond the high. Now, this shows that, yeah, the buyers are stepping in, but they're not so much in control yet. And as you can see here, it didn't turn out to be a good setup at all. Here, this turned out to be a much better setup. And we can see with the strength of it, price closing below the low, much better. Okay, here it's good, right? But we were not maybe in the right conditions to trade that. So now that we have the definition of it, let's dive and talk about the results of it. Now, I want to show you what it looks like, and we'll test the engulfing candles. Okay, so we'll really base this here on data. I don't want to be here and tell you, oh, this setup works or it doesn't work. I want to give you some data, some stats you can use to determine if that makes sense for you. So what I'm going to do is I'm going to go here, and I have this algo that I'm using for my Bollinger Band reversal trading. Now, the algo trades usually Bollinger Band, but we can tweak it and adjust it to only focus on engulfing candles. And then as we go forward, we'll add some things to see how that changes. So what we're doing now with this is I've disabled Bollinger Band. Okay, so that's simple. I have a simple, so the take profit is 3 reward to risk and 5 reward to risk. To take profits, we have stop loss beyond the engulfing candle, so very simple. And what else do we have? We have no filter here, so all good. We look for engulfing candles only, no pin bar, nothing of the sort. And we are moving to break even at 3 to 1. That's just an example to show you, like, very basic. We could change these factors. I'll just leave it like this for now, because we're going to kind of keep the same measures and start to tweak from here and find ways we can make this better. Okay, so now what we'll do is we'll just go and we'll go here. We'll do 1% risk per trade. That's fine. We'll do OK. Now what this will give us is if I pull this a little bit higher, okay, over here. This is what we have for if we trade all the engulfing candles in the market. Okay, any engulfing candles that we've defined as engulfing before, if we trade this, that's the result we'll have. So let's just take a look at the chart. If we go back a little bit, and it's going to be messy because we have like plenty of lines and things and things, but let's see what we have. Okay, so here are the setups we have with the engulfing candle only. Okay, so we have quite a few of them, and some of them last a long time. That's why, because of our rules, we don't have any trades here. Okay, because the fact that we just kind of look for big targets in that case, a 3-to-1 and a 5-to-1. But still, we have the result over here. Okay, so you can see, if we try to zoom in, we have these setups here. Over here, we went. It's kind of hard to see anyway, so that doesn't matter. But we're trading all the engulfing candles. We have one over here. We go short here. I believe we get stepped out somewhere here. So that's what we have right there, okay? Now, what we'll do is we can see the results here is pretty bad, okay? That's not something you want to trade. I just pick a random pair, by the way. It's AUD/JPY. We could take any different pair. Let's just move to a random pair, JPUSD, and see the results here. Okay, pretty similar. So we'll take that one into account for moving on. Now, what we want to do here is let's take a look at our percent profitable, so our win rate, and our profit factor. When these things improve, it's a sign that the strategy is getting better. So we want to have a profit factor that's high and a win rate that's high. That's what we'll be looking for in the best scenario. Now, what we'll do, our first test here, as you can see, trading this by itself is really bad, and I think most channels said this already, that you shouldn't trade engulfing candles by themselves. But let's see how we can make it better. The first thing I will do is I'll try to see, are we better trading with the trend or without the trend or counter trend for these engulfing candles. So here's the result without any trends. We don't look at any kind of trend here in the market. We just enter the market and then we get to do the strategy like this. So very simple. Now, what happens if we go over here? We'll edit our algo. And what happens if we keep the same thing, but we add here a trend filter? So what this does is it's a 200 period moving average, a simple moving average. And we have a few settings. So we'll just go here. What happens if we trade with the trend? Okay, so we've reduced our number of trades a little bit, I think. 24% win rate and 0.5 for profit factor. Now, I forgot what it was before, so I think it was around 25%. Let's just go back here. And what if we take off our SMA? 25. So we've actually gotten worse by using this filter. Now, another thing I want to try is we'll keep an eye here on our win rate, by the way, as we move forward. 200 period, what if we do like a 100 period? Okay, 25.6, that's good. Okay, so that's an improvement. That's pretty good. Okay, now what if we keep this one 100 period SMA? But what if we use the slope of the moving average instead? So instead of looking at whether we're above or below the moving average, we'll look at the slope. Pretty bad. Okay, so we'll skip that. Now, this is a result for the trend. What if we are trading counter trends with these engulfing candles? Pretty much the same. So not a big difference here. And what if we do, let's say, trend and no trend? So we trade when it's with the trend or when there's no trend in the market. Okay, so it seems like being with the trend is better. Okay, 25.6, it's pretty good. Okay, so I played around with it a little bit, but it seems like the best scenario I found is with the trend with a 50 period SMA, so 50 period moving average. That gives us the best result, 0.65 profit factor, 27% profitable. Now, this is not a profitable strategy yet. We're not there at all, but we can step with a trend filter. So trading with the trend, we do get better results than without the trend, and that's a good thing. So that's something we can do to improve the odds of winning with our engulfing candle strategy. Now, before we move on to other ways to make it better, let's talk about stop loss. A lot of people are going to say, well, put your stop loss beyond the high of the engulfing candle. Sure, that's the way to do it, I think. Okay, that's a pretty good way. So we can actually, with this tool here, with the algo, we can filter which stop loss type is better. So what it's using, and you can see the results here, 27%, 0.65. What if instead we use a ATR? So instead of looking at the high of the engulfing candles, we use a ATR. Now this is a 2 ATR, so that might be a bit high. Let's say, what if we do 1? Okay, 24, getting worse. What if we do 1.5? 24.6, pretty bad. What if we do a 3 ATR? Okay, at this point we reduce our number of trades by a lot, so I'm not sure I want to do this. Maybe what we'll do is we'll keep it like this, and what if we change the take profit? So I'm just going to do, let's say, a 1 and a 3, kind of like what I trade. So that way we have a better result. And you can keep it to no break even, so at 3 we'll move to break even. Okay, cool. So now we'll take a lot more trades in that case, right? Because we have a much tighter take profits. We're able to get out of trades faster. And let's do this again. 37% win rate with the ITR stop loss. And we are at 1 ATR. Let's see what we do 2. 2 is definitely more safe. So 38, okay, 0.73, not bad. Now what if we go back to our engulfing candle, high and low? 34. So you can see that using ATR in that particular case is better. Now what about pivot points? Pivot points is something that I use myself, something I'm not really good with. But we reduce here on number of trades by quite a bit. Padding, yeah, so that doesn't work out really well. So it seems like in that case, our ATR stop loss is the best. Now I'm just going to try to do 2.5. Okay, 0.75, 38%. And so I think I'll leave it at 2, but we can see the ATR here is better. So that's something that goes against what I trade, okay, because it's different. Now, what if we want to add a different filter, which I didn't take into account before, is closing the trade when we have a reversal setup. So we have an engulfing candle, we enter the trade. What if we want to close the trade when we get the opposite setup? You can just click that box here, and let's see what we get in that case. Okay, so we get a less profitable strategy, less percent profitable, so a lower win rate. And we also get a lower profit factor. So we'll just skip that. That doesn't work at all. We do take more trades though when we have this way of doing things. Okay, so now we have this. One thing that will make, I think, a big difference with your engulfing candle strategy is if you trade it with zones in the market. Like, so every strategy I talk about needs to have some zones. And you need to have a place where you look at trading at a specific zone that's reliable and likely to produce a reversal in the market. And the way I do this is I use these simple support resistance areas. So I think that's what can really help you a lot to improve your odds with this strategy. Okay, with any kind of engulfing candle, that's what will give you the best results. So what we want to do, and we cannot test this with the algos, that's something you have to test on your own time after if you want, is looking at these zones on the daily chart and then trading the engulfing candle setup on the lower time frames. Okay, so let me just hide this. What we'll do is we can go on the daily chart, and from here we'll start to do our zones. Okay, so I've done this before, not something that's too difficult. You can do it on your own time if you want. I'll just go here, and I'll try to put my lines whenever we start our backtest, and we'll be able to, from here, take the trades only at these zones. Okay, so I'll put my resistance over here. Again, I'm starting at a point right now here on the chart, so 2019, that's good. Of course, we're going to do this for the whole backtest, and that's a different issue. Here, okay, zone over here, okay, zone over here. Okay, so now we have these zones in the market that are likely to produce some results. We'll go back on our forward chart at the same period, and the goal is to only place trades that are near these zones. Okay, so your zones need to be identified on a one time frame higher than what you trade. So if you trade the forward chart like we've done before, we backtest in the forward chart. We want to be looking at your zones on a daily or maybe a weekly chart. That would be the best, okay? So I've put my zones here on a daily chart. Of course, as we go forward, we'll have to adjust these zones. We have to change this up and make it better with new price data, of course. Same thing if we go in the past, we'll have to change this a little bit. Can actually extend these a little bit over here. And these zones still fit in the past, which is pretty good. Okay, so pretty good, awesome. All right, so now what we want to do is we want to trade these engulfing candles only when we are within these zones. Okay, and that's the part that definitely takes some practice and some patience, because you cannot just kind of go straight in and start to trade. So let's turn on our algo. And of course, that algo won't tell us if it's better or not. Okay, that's an issue we have with this. I'm just going to go here. I'm going to simplify some things. We don't have to look at all of this. If you go here, trading chart, single label, quantity, just do here. Cool. Okay, so now we have a much simpler way to look at it. Now, what we want to do is we're probably going to be able to see our trades anyway here. Yes, we do see them. It's very small though, so bear with me if you cannot see this with your own screen. That's fine. What this does, by the way, these colors is showing us when it's a bullish trend or a bearish trend with the filter we have. Alright guys, so first I did this whole video about showing you the zones and how to trade them, and I had a long video of like 30 minutes more with all these trades within the zones. But I thought it would be better for you to try it out on yourself, and I decided to give you access to my algo for free. All you gotta do if you wanna be able to access the algo and backtest it yourself and test it with the zones and everything around, the Bollinger Band Reversal Strategy algo, is to open an account with the broker 8cap. Now they are sponsoring this free algo for you. So if you put an account with them, you can trade Forex, cryptos, and many things with that broker. One broker that I use myself of choice. Open an account with them, deposit at least $500 in your account, and I'll give you access to all my tools for TradingView, my algo, for the Bollinger Band Reversal, another strategy that's really good for cryptos, a trend strategy, and more cool stuff that you can use to backtest, get better at trading, and improve your results. So I'll put the link below with the instructions to do that and to open your account with ACAP. Send me an email when that's done, and I'll give you access to all my tools for free. Now, I hope this video will help you figure out what works better with the engulfing and what doesn't work. And hopefully you can get some ideas on how to use them with your trading in the future. Leave me your comments below as always. Check out these other videos to watch next, and I'll catch you back here in the next video pretty soon. Ciao.